Vascon Engineers has a fairly interesting business model. It's a mix of EPC and it has a slice of the realty pie too. Now, this company is, as I said, it's divided its pie into two parts. And interestingly, it has the flexibility to move from one pie to the other. So when the business model is such that when the realty space is doing well, it moves its projects towards that direction, or rather what its anticipation of what the realty space would be. The big positive in this issue is that their execution track record has been extraordinarily good, so there isn't worry about their capability. On the other positives, the management seems to be fairly good, and our interaction with them, we found them to be fairly progressive, fairly clued on to the industry, and the fact that they're hitting the market now, which is well after many of these EPC and realty companies have taken a beating, augurs well for them. On the flip side, when you look at this company, you realize the fact that this company is going to have a slightly tough time balancing between doing the balancing act between the two segments that it's engaged in. When you look at the order book figure of 3,300 crore, it's fairly impressive at first glance, but when you look at it a little closer, 1/3 of it is to outside parties, whereas 2/3 of it is to parties, typically EPC contracts in the realty space where Vascon Engineers itself is partnering in that project. So those are typically internal projects, and their realty projects seem to have a fairly long gestation period. If you look at the immediate future, I think most of their revenues, the way they account, they defer their revenue recognition and, mind you, also the expenditure recognition to such time as the projects get over in the realty space. So revenues, or rather net revenues, hit the profit and loss only at the end of the project. When you look at that and when you dissect it, you see that 2009-10 is almost over. 2010-11 is not going to see any significant boost in revenues, but it's really in 11-12 and 12-13 that you will see a substantial boost because of this lag effect. Would you be willing to pay a P multiple of 30 at the current level? I think given the kind of market conditions, most of those playing for a listing flop won't be participating in this issue, at least among retail investors. Those who have a longer term time frame could perhaps have a look at this issue. Maybe they may get it at a lower price post listing. So hold your horses. Is this a good company? Yes, this is a good company. Is the pricing ideal? There is a question mark on that. Partially because of the realty part of the business. The way realty stocks have been beaten down in this current meltdown in the market raises a question mark as to whether the market is ready to accept realty issues. Once again, the positive here is that they do have an EPC segment which is fairly robust and is kind of scalable. So this company actually offers you some kind of an insurance there. But at the end of the day, with the kind of pricing and the kind of market conditions that we have, I think retail investors would perhaps, especially those looking for listing gains, would prefer to miss this issue. A more serious investor might wait to pick up this company in the secondary market. One thing is for certain, this company and its business model is fairly interesting and it merits watching.